Welcome to the Deep Dive.
Hello.
We're cutting straight to the core today, taking a close look at the latest update from Solaria specifically, their first quarter 2025 performance.
And maybe more importantly, what their leadership is signaling about the path ahead.
Exactly. We've sifted through the commentary, the numbers, and our mission is really to help you quickly unpack the most significant insights.
Yeah, understand the strategy, what management's saying.
Right. These earnings updates, they're more than just looking back, aren't they?
Oh, absolutely. It's a chance to hear directly from the exec team about their outlook, their vision. And this call gave us a pretty direct view into Solaria's confidence level.
And where they see the growth coming from.
Definitely.
Okay, let's start right there with the immediate results. Solaria's Q1 2025, how did they frame those numbers?
Well, management kicked things off calling it a very strong set of results.
Okay, strong how?
Looking at the key figures, you see increases pretty much across the board: revenues, EBITDA, net profit. But the real standouts were net profit and EBITDA, both more than double.
Doubled?
Yeah, increased by over 100% compared to the same quarter last year.
Wow, okay. Doubling profit and EBITDA, that certainly sounds impressive. But I understand management had kind of an interesting perspective on this relative to the rest of the year.
They did, yeah. It was quite something. Despite those huge increases, management actually described Q1 as what they expect to be the worst quarter of the year.
The worst quarter, with profit and EBITDA doubling.
Exactly. Numerically speaking, that's what they said. Sets a pretty high bar for the next 3 quarters, doesn't it?
It really does. So what's behind that? Why do they think the rest of the year will be even better?
It boils down to visibility. They said they have strong visibility for what they called excellent results, especially in the first half of the year.
Okay, so excellent first half results starting from a quote-unquote worst quarter that saw massive growth. What does that mean for their guidance, their forecasts for the next few years?
And this is where their confidence, really came through loud and clear. Based on this strong start and that forward visibility, management stated they believe they will likely need to update and increase their financial guidance, not just for 2025,
right,
but also for 2026 and 2027.
That's a pretty significant signal to send. Any timeline on when we might actually see this potential guidance increase?
They flagged 2 possibilities. Either when they report their first half results, which would capture that strong Q2 they're expecting, or maybe during their planned investor day in September.
September, okay. And the language they used about beating their previous numbers, it wasn't subtle, was it?
Not at all. Very direct. They expressed strong trust that they are going to soar. S-O-R-E, there were the previously presented numbers.
Soar, like soar above them.
Yeah, that seems to be the implication. Not just meet, but significantly exceed. It really underscores their conviction.
Okay, so picture painted. Strong Q1, even stronger H1 expected, clear signal of raised guidance coming.
Mm-hmm.
But management themselves kind of pivoted, didn't they, saying the future is more important than these past results?
They did. They wanted to focus on the strategy.
So what are those core strategic pillars they're focusing on to drive that future growth?
Well, they outlined several key areas. The first, maybe obviously, is just continuing the core construction and capacity growth of their solar assets.
Right. Building more solar farms. Makes sense.
Exactly. They're actively constructing over 1.4 gigawatts of capacity right now, mainly in the Iberia region. And they said about half of that construction work is already done.
And when do those projects start generating power?
They expect to connect a lot of these to the grid during the 3rd and 4th quarters of this year, Q3, Q4.
Okay, so we should see a noticeable step up in operating capacity and presumably revenue towards the end of 2025 then.
That's the idea.
Are they planning to slow down construction after this wave?
Quite the opposite, it seems. They plan to actually kick off construction on an additional 2 gigawatts of developments during 2025.
Wow.
So that suggests an increased construction rhythm, picking up the pace. Their ambition is pretty clear here, to finish as the leader in the Iberia region from a solar capacity perspective.
Okay, so accelerated solar build-out, that's pillar 1. But a big theme from the call seemed to be expanding beyond just solar, right?
Absolutely. Ooh. This is where it gets really interesting strategically. Hybridization, batteries, and wind. Again, the initial focus seems to be Iberia. And they highlighted a key advantage they have.
Which is?
Their existing grid connection points, the ones they built for their solar parks. They're apparently already suitable for adding wind turbines and, crucially, batteries.
Ah, leveraging that infrastructure they already paid for. Smart.
Precisely, like building the highway. And now you're adding HOV lanes and maybe even, I don't know, hyperloops later.
Huh.
On the battery front specifically, they made a pretty bold claim, positioning themselves as potentially the #1 player by sheer volume of battery capacity in Europe, especially Iberia. They cited a portfolio exceeding 20 gigawatt hours.
20 gigawatt hours. That sounds like an enormous number. Is that installed now or planned?
That's the portfolio size, the pipeline. Installation, actual boots on the ground, is set to begin actively during the second half of 2025.
Q3, Q4 again?
Yep, using batteries they've already acquired. Management sounded very confident, expecting an enormous volume of this battery capacity to be up and running during 2025 and into 2026.
Why are batteries such a big deal, such a game changer for a solar company?
Fundamentally, it's about maximizing the value of the electricity they produce. Solar generates power when the sun shines, right? Midday.
Right.
Batteries let them store that power and then sell it strategically. Maybe in the evening or overnight when prices are often much higher than during peak solar hours.
Ah, arbitrage, basically. Time shifting the energy.
Exactly. It extends their effective generation hours and helps them optimize the merchant prices they get. They can really capitalize on those big price differences between day and night we often see. They see it as, well, critical for the future grid in Iberia and across Europe.
And is this push happening now partly because of regulatory changes? Did they mention that?
They did. They pointed to recent rule changes in Spain that apparently removed some technical roadblocks that used to hinder battery integration.
Okay.
So they're saying it's basically timing for batteries now.
Yeah.
That plus the current market prices with those big day-night spreads.
Any other tailwinds?
Yeah, the Spanish government also launched a new 700 million program specifically to support battery growth.
Ah, subsidies.
Potentially significant subsidies, yeah, which could really improve the project economics, shorten the paybacks.
Makes sense. What kind of capital are they actually deploying on batteries right now?
They mentioned signing contracts for over 50 million just for battery installations planned this year.
50 million. Okay.
And they're targeting pretty attractive paybacks, aiming for less than 5 years. And that's before even factoring in those potential government subsidies.
Are they funding all this themselves or looking for partners?
They seem very open to collaboration. They mentioned talks with funds, other energy groups, looking at potential joint ventures, co-investment, maybe even selling stakes in their battery pipeline. Their pitch is basically, we've got the ready-to-build permits, we've got the grid infrastructure already in place.
So they bring a lot to the table for a potential partner.
Exactly. And they're developing both standalone battery projects and ones co-located with their solar sites.
Okay. Let's shift gears to another area that got a lot of airtime. Data centers. CMD, they called it.
Yeah, CMD, critical mission data, basically data centers. This was presented as another huge strategic pillar, a really high conviction bet for Solaria.
Why data centers?
Simple answer, electricity demand. They expect enormous consumption of electricity from the massive growth expected in the data center sector, AI and all that, especially in Iberia and Europe.
Okay, massive demand. How are they planning to capture it?
They've been working proactively to secure grid connection points, about 1.2 gigawatts worth, specifically earmarked for data center consumption in Spain and Iberia.
So they've secured the plug points, essentially.
Pretty much. And their team focused on this area is apparently extremely active right now, busy closing deals for long-term power supply agreements with data center operators.
Why is landing these data center customers so attractive for a company like Solaria?
Management stressed this is absolutely key for the coming years. Data centers are large, stable, long-term customers.
Predictable demand?
Very predictable, significant power demand. So that translates into secure cash value, helps underpin the company's long-term finances and growth. It means less reliance on those volatile spot market prices, more locked-in revenue streams.
This really does sound like it could be transformative for their business model.
They certainly think so. Management used some strong language. They explicitly said this business will change completely the face of the company. Yeah. They're so focused on it, they're actually dedicating a specific investor day in September just to the data center business.
Okay.
And they plan to announce contract signings there. They expect deals to be signed during 2025. Could be before, during, or after that September event. It signals this isn't just a long-term dream. It's happening now and through the next few years, 2025 to 2028 and beyond.
Change the face of the company. That's a bold statement. How do they view their competitive edge in this space?
They see themselves as a crucial enabler. They believe they have the best platform in Europe for serving data center growth, specifically from the perspective of an electricity supplier.
Which probably ties back to owning all that grid infrastructure and those connection points we talked about.
I think that's exactly the link, yeah.
Okay, so we have the big pushes into batteries and data centers. What about their core solar business?
Yeah.
How are they managing their PPA strategy and merchant exposure? Are they still signing long-term deals?
They are. They reported signing one relatively small PPA, 50 megawatts, with Trafigura.
Trafigura, the commodity trader.
That's the one. They highlighted it, even though it's small, calling it a good signal, and noting Trafigura is a new key player in the Spanish power trading market. Signing these PPAs, these power purchase agreements, is still crucial for them.
Why crucial?
It locks in stable revenues and helps them achieve good project returns, good internal rates of return, or IRRs, predictability.
Right. Are more PPAs coming?
They strongly indicated yes. They mentioned having an incredible pipeline of negotiations going on with potential new PPA customers. They sounded confident they'll report new deals in the short term with really good and exciting conditions.
And what about their exposure to the spot market, the merchant price?
In Q1, their merchant revenue, the part exposed to volatile daily prices, was around 25%.
Okay.
Their overall average selling price in Q1 was about 59 euro per megawatt hour, which was a mix of that 25% merchant exposure and the 75-76% fixed price portion from existing PPAs.
And going forward?
They stated an ambition to get that merchant exposure down closer to 20% by the end of the year. Though they did add a caveat that things can change extremely fast given how many PPA negotiations are happening.
So it feels like this whole strategy, the solar build-out, the batteries, the data centers, it's all interconnected, isn't it? Leveraging those core grid investments.
Absolutely. Management really hammered this point home. Owning their own grid, substations, generation assets, it opens doors to other extremely attractive businesses beyond just selling solar power.
Like what?
They specifically mentioned real estate, like their Energa venture, which seems linked to the land around their infrastructure plus data centers and batteries. They describe these as being linked completely with their core generation business. It's all about getting the maximum value out of that big upfront grid investment.
Okay, let's pivot to some major corporate actions they announced, starting with a pretty significant share buyback program.
Yeah, this definitely caught people's attention. Solaria announced plans to buy back up to 10% of the company's own shares.
10%, that's substantial.
It is. It translates to over 12 million shares they're targeting to acquire in the coming months.
When did they say this would start?
Immediately. Execution was planned to start tomorrow, the day right after the earnings call. And they stressed there are no limitations of time or quantity until 10% is reached.
Wow. How are they paying for such a large buyback? Is this money that could have gone into building those solar farms or batteries?
That's a key question, and they addressed it directly. They were very clear. The buyback is funded by a specific credit line arranged just for this purpose.
Ah, separate financing.
Exactly.
Yeah.
It is not linked to or taking away from the funding needed for their ongoing investments in Spanish solar capacity or their regular operations and other growth projects. It's distinct.
Okay, so separate funding. But why do it? Why spend potentially a lot of money buying back shares right now, especially when they have such ambitious growth plans? What was management's reasoning?
Their rationale was, well, blunt. They think the share price is cheap.
Simple as that.
Pretty much. They explicitly called the buyback the best investment today. They even said it could potentially be the best business of the company right now.
The best business, buying their own stock.
That's what they said. Their view is that the market price, the actual value of the shares, just isn't reflecting the real value of the company, considering their assets, their pipeline, these new strategic moves.
So it's a strong signal that they believe the market is undervaluing Solaria significantly.
That's the message, loud and clear.
Yeah.
And they express confidence the market will figure it out eventually, long term. But then they added this rather pointed comment.
Oh.
They said if the market doesn't recognize the value, well, they'll just acquire shares and don't care too much.
Doesn't sound like they're bluffing.
Doesn't seem like it. They also hinted that the specific purpose of the buyback, beyond just thinking the shares are cheap, maybe plans for those acquired shares would be explained more in the next quarters. So maybe not immediate cancellation.
Interesting. That's quite a level of conviction. Shifting slightly, but still on financing, how are they managing the funding for all this activity? The construction, the data center push, the batteries, plus the buyback.
Well, besides the separate buyback facility, they did mention securing a new financing agreement with Sabadell Bank. That one was for 175 megawatts, specifically linked to a data center project.
Okay.
And as we discussed, they really reinforced that the buyback funding is separate. Management projecting confidence that they have the financial capacity to handle both things, keep investing aggressively in new capacity across all these areas, and execute this big share buyback at the same time.
Okay. And just quickly, did they say anything about asset yields specifically related to their land business?
Just a brief comment related to their land business, presumably securing sites. Maybe the Energa venture, they stated they're now able to get much more than the roughly 8% yield they might have talked about before. So focus on maximizing returns there too.
Right. So putting it all together, the strong Q1, the expected guidance hike, the big push into batteries and data centers, this massive buyback, it really sounds like we should expect a flood of news from Solaria soon.
Management absolutely telegraphed that very strongly. They said a lot of things will happen during 2025. They specifically mentioned expecting a lot of news and press release during the next weeks and during the next 3 months.
Weeks and months, okay.
And they circle back to that idea that the company is going to change completely and that this will hit the bottom line positively, reinforcing the worst quarter comment about Q1. While they didn't explicitly map out, say, asset sales, the overall language definitely suggests significant corporate activities coming. Deals, partnerships, announcements tied to these new strategies seem very likely.
Okay, one last point. Leverage. With all these investments and the buyback, are they worried about debt levels, net debt to EBITDA?
They addressed that. Management stated they are not worried about leverage. In fact, they expect the net debt to EBITDA ratio to be reduced significantly for the end of this year.
Reduced? Even with the spending? How?
They attribute it to the strong underlying business, the anticipated earnings growth, and importantly, the cash generation kicking in from all those new projects coming online later this year. More EBITDA, basically.
Okay, makes sense. So let's try and wrap this up. What does this deep dive into the Solaria call really mean for you, the listener?
Well, I think it paints a picture of a company that's not just reporting good recent numbers, but is incredibly focused on and confident about its future. Management is very openly signaling much higher expectations for the next few years.
And they're not just sticking to their knitting, are they? They're aggressively pushing into these big new areas, batteries, data centers that they genuinely believe will fundamentally change the company.
Exactly. And then there's the buyback. They're backing up all this confidence with a very large, separately financed share repurchase program. It's an explicit statement. We think our stock is undervalued, and buying it back is the best use of capital right now.
You really heard their conviction that the market price just doesn't reflect what they see as the company's real value and its potential, especially with these big strategic shifts.
Definitely.
So here's something to think about. Solaria's leadership is making a very public, very financial statement of belief in their own valuation via this huge buyback. At the exact same time, they're telegraphing these major near-term developments in high-growth sectors, data centers, batteries that they claim will change completely the face of the company and let them soar past their guidance. How does the market process that combination? Aggressive financial action meeting rapid strategic evolution. What could that mean for a company betting so heavily on its own perceived undervaluation and its transformative future?